All right, good afternoon, everybody. Tuesday, May 14th. Hope everyone's doing well. So let's jump in. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. I'm out of Google. I got out of Roku at one point, but then I got back in, and I'm still in. I got back into Apple, but got out of it. I got into Shopify and got out of it. I got into GameStop and got out of it. Everything else should be pretty much the same. Wait a minute. Do I not have those S covered calls anymore? Oh, I guess I don't. I need to take that off. Almost all the same, and that means that, whoops. Where'd my disclosure just go? Let's take this off. I don't got shorts, all right? Who's got shorts? Look at this stock market. How are you gonna short stuff? No shorts. Oh, I'm just messing around. SPYs are up about 0.5%. Qs are up 0.65. IWM is up 1.1. TLT is up 0.5%, working its way higher. I think this is a new recent closing high for the month for TLT. So let's recap a little bit. So yeah, it was a strong day. It was really a strong afternoon for the SPYs and the Qs. The IWM gapped up early off the PPI number, which we can also discuss real quick. The main event is tomorrow. 8:30 a.m. we get the CPI. I think the expected number is 0.3% month-over-month increase, but I'll double check that research tomorrow morning. CPI is going to be the big one, and I think that the risk is to the upside for this market, which isn't to say that we can't go down if the number's hot. We can definitely go down if the number is hot, but the risk is to the upside. So initially this morning when the PPI came out, there was a very quick downtick because the number was hot. I don't remember if Pat wants to repost it. I'll read it. Otherwise, I'm not going to go up and scroll it. But it was like, depending on if you're looking at the core number or the overall number, it was like a 0.2 to 0.3% above expectations on the month-over-month number. And that sounds bad, and that's why this market had this very quick initial downtick. But pretty quickly, and Rock, if he's listening, great job on pointing this out, how fast you noticed it. It was the revised number that saved the market. So we came in hot for last month, but we revised the previous month down by about 0.3% or so. So if you net those numbers out, they kind of make everything kind of come back in line, basically. So the market had that quick initial downtick, then took some time to digest the revision, and then was able to recapture the 8:30 a.m. high. And the IWM really led up, which is what you would expect to see in a market that's giving you some interest rate relief, which you would not expect to see on a hot PPI or CPI. But like I just explained, it seemed like those numbers netted out. So you can see the TLT here. Also, quick downtick, real quick interest rates are up, fully negates it, then overshoots to the upside, and interest rates are down, and that is giving really good pre-market relative strength to the IWM. Intraday, especially in the afternoon session, the IWM was relatively weak to the SPYs and the Qs, which really took off past their opening high and gave great intraday continuation. But it was really just more of them playing catch up, because as you can see here at the end of the day, even with the really strong rally in the afternoon in the Qs, they finished up 0.65%, whereas the IWM finished up 1.1%. So on a percentage basis, Russell outperformed post 8:30, but the Qs caught up a little bit into the close. So overall, this market looks great, and I think it shows to some degree a little bit of what I'm talking about for tomorrow, where I think that the risk is to the upside. I think that even an inline number, we should see the market move up a little bit. That would be my expectation. I could definitely be wrong on that. But if the number comes in light, if you get a number coming in below that 0.3%, I think that we could really, really squeeze higher. I think it'll give more fuel to the fire for these long duration stocks that we're already starting to see squeeze with GameStop. I think that there's a potential that TLT could hit that point that we discussed on Monday, that then causes the CTAs to have a little bit of a short squeeze, and maybe you get a virtuous cycle of buying that comes into bonds, which causes interest rates to go lower, which increases the feedback cycle for these long duration equities that we're already seeing moving up. So this market looks great. It looks great technically. And I think that I really do think that the risk is to the upside. Though, of course, if we get a hot number, the market won't perform. But I think that, like, if you had a 0.1% hot number versus a 0.1% cool number, that the move higher on the cool number is more than the move lower on the hot number, is kind of where my head's at. So that's what I'm still trying to position myself for. It's been working out great these last couple of days. I was already having this train of thought coming into this week, and obviously seeing GameStop go and some of these other names in play, which are the exact names I'm trying to be long right now anyway, is definitely been a really good boost to my P&L. So no complaints on my end. Market continues to work its way up. That pre-market low had just about touched the 80 MA on the daily chart for the SPYs and the Qs, but on an intraday basis, we still never got down there. So we closed at 523 quarter, it looks like, with the 80 MA right now at 518. That will obviously move a little bit higher, that 80 MA tomorrow, but as of the close today, we've got just about $5 of extension, which puts us right on the borderline of a degree of extension where you can still be pretty comfortable for upside continuation versus a degree of extension where you start to get into that no man's land where risk reward on new trades becomes a little bit more difficult, at least from a market perspective. So obviously we'll see how we gap tomorrow. The CPI tomorrow has the capacity to change everything. It could create huge continuation. It could give us big upside extension into the market, or it could totally break this market down, have us test or potentially even lose 515 on the downside if the number comes in real hot. So we'll see how we end up gapping tomorrow. It'll certainly be an interesting one. But coming into the number, this market's looking fantastic. It looks like it wants continuation. I've been saying that ever since we recaptured 515. That it looks like new all-time highs are incoming. Qs also looking great, giving continuation. Have a bit over $5 of extension here, so just kind of bordering into that no man's land, but we should reassess that in the morning. And IWM closing above 206 looks really good, even if it couldn't give the same upside move in the last 2 hours of the day. Close above 206 in the IWM looks great. Let's see these moving averages catch up a little bit further. So yeah, overall market is looking fantastic. From a trading perspective today, I tried to establish a little bit more of a cautious tone into today's morning meeting, whereas yesterday I think I tried to establish a little bit more of an aggressive tone, just with where some of these stocks were actually set to gap up to and where they were set to open. It can create a lot of trading opportunity potentially on both sides of the market, and I'm really happy to see that some of you guys took advantage of it and put up some really big P&L numbers. But at the same time, when you start to get into this degree of extension and this degree of squeeze, it opens up, I think, a lot more risk as well. So I was really trying to extra push caution on risk management and make sure that your sizing is under control, and to recognize that if you're trading GameStop at $60, it's very different than trading GameStop at $20 as far as liquidity goes, and the amount of stock that you want to take with the amount of space risk that you want to give it. Generally, as the stock has become significantly more expensive, you want to be taking less stock and giving it more space. So while I'm really happy to see that a few of you guys performed great today, I was also a little unhappy to see that a few of you guys didn't really heed that advice this morning and didn't managed risk well enough, and I think got maybe a little bit too caught up in the euphoria of some of these movements. We have to just recognize that this type of environment creates a lot of trading opportunity, but there is absolutely risk that goes with it. And if you're on the wrong side of GameStop when it moves from 60 to 40, or you're on the wrong side of GameStop when it moves from 60 to 80, you can lose a lot of money on either side if you're not willing to, very quickly admit that you're wrong and stop yourself out of position. So you got to be, I think, honestly, pretty selective at this point on the trades that you're taking. And when you're taking those trades selectively, then you need to stop yourself out when it's breaking your points and understand what your dollar risk is on these trades if they're not actually working. But by doing that, for myself, it was a good day. I was able to make a few dollars in GameStop off that initial low. I always love that trade on the really big gaps when you kind of get a pivot into the first test of the 80 EMA on the 5-minute. Tends to be really good with like earnings trades. I'm seeing GameStop and AMC both continuing to squeeze here after hours. I was very tempted right as I was about to press the play button for the afternoon meeting to take the offer at $7.04 in AMC, and I was like, this is a piece of crap company. I don't want it, and I just would rather focus on the meeting. Here we are at $7.55. But anyway, I love that first trade into the 80 EMA. That was my trade that I took at GameStop, but it worked, I'm pretty sure, in AMC. It worked in like this BB that someone called out. So that's a good trade. That was the only trade today that I took in GameStop. Made a good bit of money in it, but also made sure to hold a runner where I said my target on 50% of my runner is $75 and my target on 50% of my runner is $100, because why not? Why not? At that point, I'm going to make money in it no matter what, and guess what? I got stopped out, and I did make decent money in it. But for that remaining position, might as well focus on just maximizing reward, and either I'm in a position where I'm going to make some good money, which is what happened, or I'm going to make a boatload of money, which isn't what happened in GameStop because it didn't go. And that's fine, but you consistently put yourself in that position, and eventually one will work in your favor, and you'll be able to kind of capture that move off of it. So that was a good trade. I messed around with Shopify a little bit. I actually did better with it than I kind of expected I would. I kept buying 57 and selling 57.50 and was able to do it like 4 or 5 times. And then liquidated the position, and it just kind of continued to move up. Got out of Apple today. I got out of Google today. Traded Baba. I'm back in Alibaba. Back in Alibaba. Started really light pre-market at 80. Kind of rebuying some stock there, which I'm planning. Even though I came in flat with money that I've already made, and was able to build in a little bit down to 78, made a few bucks on that bounce, and it closed okay. JD reports tomorrow morning, so that's the more important one to me. I'm going into JD with a decent little bit of size, so we'll see how it plays out. But bottom line is, PPI worked out well today. We actually, despite the number coming in hot because of the revision, we got some interest rate relief. We got continuation from the market. So CPI tomorrow is going to be the main event. At the same time, there was some really good trading opportunity with these meme names, and it's just really important to not get overly caught up in the euphoria. Take your trades, get yourself stopped out, but also recognize that if you catch one of these properly, there is a tremendous amount of upside or downside reward if you're able to get follow through on the trade. So that's really all that I've got, and I am happy to take a look at any questions you guys might have, or any trades you want to bring up, or anything else. First from Rex. This morning I took a long on United Airlines, UAL. Let's take a look at the daily chart. Daily chart looks fantastic. Yesterday was a day 1. Today you're chasing a little bit of a day 2, which I don't hate. It wasn't too extended after that day 1. Let's see what your thought process was. With the daily chart breakout through 55. Okay, so 54.67 was this recent high. Yesterday's high is 54.68. So really 54.67, 68 seems like it's the spot. Going back further, seeing a little bit more resistance at 55 from 2023. So with the daily chart breaking out through 55 with some relative strength, United had some news this morning. Okay, I missed that. With them expecting travelers up 10% over year. I did see that. I took the trade off the open using the opening low as my stop, but when the volume just died, okay, opening low is your stop. When the volume died down and had me stuck in it the whole day, even as the market grinded up midday, United still stayed in its range, but it also held $55. How would you avoid or deal with a situation like this and know if it's best to get out of these stocks? Um, Sure. So with UAL and a trade like this, the first thing I would say is that you have no way of knowing when you're first entering the position that the stock is going to end up just getting stuck and going sideways all day. There's no way that you can know that. All you know is the trade setup that you've established for yourself, what your entry price is, what your stop loss is. So that's your risk portion of your game plan, and what your upside potential is if the trade works out and the trade continues, and what your game plan is for that. It's not unusual at all. I mean, this UAL is very tight all day, but I don't think it's that unusual for me to, take a new trade and have expectations of profit, obviously, or I wouldn't take it. And then the stock just gets stuck in a range and it never stops me out, but it never gives me the continuation. When that happens, I do nothing. I sit in it all day, and I don't waste much time looking at it. My stop is out. My offers are out per my game plan to book profit. And if it wants to not take any of those offers but not hit my stop loss, then I'm not gonna give it any focus. But I'm also not gonna liquidate the position because again, I put the trade on for a reason, and I put on a game plan, and I put on risk on that game plan. So I'm not just going to get out. I already took on the full risk of the trade. I need to see how it plays out. And then into the close in the last, 5 minutes of the day, and then we'll take a look at the stock and I'll assess the situation. Where is it set to close? How much of a profit do I have on it? Is this something where I have enough of a profit cushion where I should swing it? Even if it didn't really give me the follow through today, the daily chart looks great. So should I swing it if I have enough profit cushion? The daily chart says yeah, swing it, but you still have to manage risk. So you need to make sure that you have enough of a profit cushion in order to be able to do that. And then that's it. I'm either deciding if I'm taking it or I'm not, or I'm taking some and I'm selling some, and I hit out accordingly of what I need to hit out with at the close. And that's it. I don't think that there's any way that you can know ahead of time that, if you're asking me how to avoid being stuck on a stock that gets stuck, it goes sideways all day, I don't think that there's any possible way to avoid it. You just take your trade. You don't know what the result of any trade will be when you get in it. Trades can fail. Trades can work perfectly. Trades can, work a little bit and then fail. Trades can get stuck in a range all day. All of those are potential possible outcomes. And again, there's no real way to know ahead of time which outcome you're going to get. So just follow the game plan. That would be my suggestion. Popping over to YouTube. Actually, no, I think I missed a question here from Taff. A couple of times today during the session, you and Pat reference order imbalance data. Where are you guys seeing that? Is it a level 2 access feature? It's actually in the level 1. So this is still showing the imbalance data from the closing imbalance. So this is already satisfied, but you can see AMC here ended the day with a closing imbalance of 94,919 shares. So that's the imbalance. I can see that data every time a halt happens. What usually happens is whichever direction the imbalance is, if it's a buy imbalance, the stock's going to gap up after the halt. If it's a sell imbalance, the stock's going to gap down after the halt. So usually, but not always, happens. That is additional data that you have to pay for. So probably most of you don't have it on your level 1. If you want to reach out to the trade support team to get a quote for it, you definitely can. I don't think it's important information. It's nice to know when a stock is halted, if it's most likely going to gap up or gap down, and maybe you can prepare for that a little bit. Um, but you can't do anything when the stock is actually halted. So I don't necessarily recommend paying for it. Pat's saying that there are 3 imbalanced data sets: Nasdaq, New York, and ARCA. So Pat, I can see imbalance data on every single stock, Amex names, New York Stock Exchange names, Nasdaq names, for MOOs, MOCs, and halts. Does that mean that I have the data on all 3 sets, or am I potentially missing some, like maybe this just shows me the New York imbalance, but I obviously get the Nasdaq also. But maybe there's additional ARCA data that could be offsetting some of this that I don't get. That's what I'd be curious. Can you see AMC? Because AMC is a New York name. Or can you only actually see the Nasdaq stocks? Oh, you can't see AMC. That's interesting. Um, for an so the ARCA imbalance data set is interesting because ARCA is not an exchange that stocks trade on, right? So Nasdaq, I would assume, gives you Nasdaq names. New York gives you New York names. What does ARCA give you? Or is there a specific like MOO, MOC order that you can put through ARCA that gives a whole separate imbalance set where maybe AMC has 2 imbalances or it has offsetting imbalances? Yeah, you don't know either. Interesting. Thanks for the information. Um, Question from Michael G. Question about throughprints. A little after 8 a.m. this morning. Yeah, it was interesting that some of you guys like only I feel like noticed that for the first time today. A little after 8 a.m. this morning, there were a ton of through prints going off the bid in GME. It's every stock. 8 a.m. at every stock, there will be prints going off all over the place in every stock, every single day. You probably just noticed it more today, and maybe it was more prevalent in GameStop just because of everything that's going on, and maybe you had bigger focus on it. But that happens at 8 a.m. for every stock every day. There are prints that go off for like 3 minutes all over the place. It's annoying. It messes up the charts. It messes up the candle for that time, and yeah, I mean that's it. But yeah, they all come from ADFN, so it's all dark pool stuff. And I think, so can I explain why that's happening? Not perfectly, but I think that's just the reporting time. I think 8 a.m. is the reporting time for dark pool prints. So dark pools have different, and it shouldn't be this way. You can get me to go on a whole tangent about how dark pools themselves shouldn't be allowed to exist, and the market manipulation that's basically able to occur because of the fact that they exist. But dark pools have different reporting times than the light market does. And anyone who's taken the Series 57 recently might have more up-to-date information than I do on how this actually works. But they don't have the same reporting times. So when if you're looking at the market at 7 o'clock in the morning, you're seeing prints go off on ARCA. Like right now, as I'm watching AMC, I am watching dark pool prints go off. I'm seeing ARCA prints go off. I'm seeing dark pool prints go off. I'm seeing ADFN prints go off. But prior to 8 a.m., if you're looking at AMC at 7 a.m. this morning, you won't see any dark pool prints going off. You will, I don't think. You'll just see light market prints going off. It doesn't mean that there aren't transactions that are occurring away from the light market. It just means that they're not being reported. So 8 a.m. hits, I guess that's the reporting time, and all these previously occurred transactions hit the tape all at once, and that's why you'll see these prints that go off way away from the inside market. But you can't get filled on any of those prints. It's like useless information, basically. So there's nothing to do about it. It's annoying and it messes up your charts for like 3 minutes. Um, and you can't have stops out pre-market, so you don't have to worry about those very wide prints at 8 a.m. triggering stops. But you can get through prints during the market. Through prints that occur during the market are different than the prints that you are seeing at 8 a.m. Through prints that happen during the market happen because of a failure for an exchange to properly route to a exchange that's showing a better price. So technically, every single time you see a through print happen during market hours, and they happen all the time, right there on AMC, like as I'm talking, like 2,000 shares, 3,000 shares just went off as a through print at 89 cents there. Sorry, at 39 cents there. Um, Technically, every single time that occurs, it's a violation of Reg NMS. In theory, it should not be allowed to happen. Technically, it's even illegal. And for a while, it was also a big pet peeve of mine. I'm not as much of a hyper scalper as I used to be, so it doesn't affect me in the way that it used to. Um, but yeah, through prints are a violation of Reg NMS. But when you think about the stock market, I mean, AMC had 607 million shares happen today. Think about how many transactions occurred across every single stock and ETF in the stock market today. Billions and billions of shares traded hands today. So it's just not perfect. The machines work as best as they possibly can to maintain Reg NMS and to route orders properly, but it doesn't always work. So usually what you'll see happen is, let's say that the inside offer is 39 cents and the inside offer at 39 cents is only showing on ARCA. There are no other exchanges at 39 cents. Usually that happens when either it's a very thin stock or that exchange has a refreshing order and they've taken everything else out. But in this moment at 39 cents, it's all ARCA and every other exchange has orders that are above 39 cents. So now you come along and you decide to buy that stock and you route your order through NASDAQ. Well, let's say that the best offer on NASDAQ is at 40 cents, but there's a better offer on ARCA at 39 cents. You just routed your buy order to NASDAQ. Are you supposed to get 40 cents as your fill because that is where the best NASDAQ offer is? Or are you supposed to get 39 cents because that's where the best offer is? The answer is you're supposed to get 39 cents because that's the best offer. So what happens behind the scenes is when you route your buy order to NASDAQ, NASDAQ receives that order. It recognizes through its computer systems that its best offer is 40 cents, but there's a better offer of 39 cents. It's supposed to then take that order and reroute it back to ARCA. Occasionally what happens is it fails to do that. When it fails to do that, even though 39 is the inside offer, you will see prints go off on 40 on other exchanges because in this case NASDAQ failed to route and you get 39 cents as your entry price and 40 cents as your entry price when you should have got 39, and it goes off in the tape as a through print. The annoying part about that is, let's say that you were in this exact same situation, you were short and your buy stop to get out's at 40 cents. If I, am the buyer and I just routed to NASDAQ and I am the culprit of the through print, that through print just triggered your stop. And that's annoying because technically your trade didn't fail. You shouldn't have gotten stopped out yet, but your stop just triggered because I just ticked 40. You might even find that you get price improved on your stop loss. Your buy stop was at 40 cents, but your order was properly routed to give you the best possible print, which was at 39. And even though you had a buy stop at 40, you got 39. When that happens, you, in my opinion, should generally immediately take your stock and take your trade back. But it's just annoying because if you take it back, then maybe your trade actually fails and the real stop happens, and then you just took like a whole extra loss because that through print occurred. There are, and this gets a little bit outside of my knowledge set, maybe Pat knows, there are limits in place, I think, and I don't know if that's at the system level or what, But there are limits in place where, if we're talking about $7.39 and $7.40, if a random throughprint somehow goes off at $8.40, a dollar up, I don't think it should trigger your stop. At a certain threshold above the inside market, I don't think it should trigger your stop. But anything within that threshold will. And then again, you should just, in my opinion, take your stock back. Just rereading your question to make sure I covered it. Why is that? And would that same rule apply to GME today, even with the volatility? Yeah, I think I covered your question. The 8 a.m. prints have nothing to do with anything as far as our actual trading goes. Yep, no problem. From Vikas, how would you handle NVIDIA? Hard to get a position the last 3 days. It keeps spiking down and taking out stops, but it looks good on the daily. Yeah, NVIDIA does look good on the daily. It was on my list for a long yesterday, but then if you remember, when we were doing the morning meeting yesterday, bad news came out. So as I was doing the morning meeting, I said probably don't be involved in this NVIDIA unless maybe it can recapture 900 and it gets back above $900. Because the stock just went from relatively strong to relatively weak and bad news came out. So that was yesterday. As far as the execution goes, I like NVIDIA long here. I like it above $900 if it's holding above $900. It's just a matter of how do you execute. First thing I would tell you is I haven't been closely watching NVIDIA intraday to be able to give you great feedback on it. Just because I haven't been watching it and I haven't been trading it. But what I mentioned in the morning meeting today was that you could be long NVIDIA versus yesterday's low. So if you're a little bit bigger picture on it and you want to take advantage of this daily chart picture, yesterday's the type of price action that you want to see if you want to be long, by the way. I don't even remember what the news was, but I do remember that NVIDIA had bad news come out pre-market, hit the stock down, yet they were able to tail this thing all the way back up and close it well and close it above $900. It's a very good sign generally when a stock has bad news but is able to hold in or move higher. So the fact that GME was able to do that yesterday is a signal that the buyers are very present in this thing, and they immediately came in and they bought the bad news and drove it back up and still gave you the close above $900. So that makes yesterday a really important pivot point. So you could kind of just trade this as basically a bull flag, but you could utilize yesterday's low as a stop loss. So the stock gapped down today because the NASDAQ basically gapped down, and obviously it trades with the NASDAQ. So one thing that you could do is you could just be a little bit bigger picture, and you could be long versus yesterday's low. If it doesn't give you that opportunity, which I would argue that it kind of did today, if it doesn't give you that opportunity or you miss that opportunity, then you kind of just need to find something on the intraday, and that's trickier because you don't know, is today the day? Is today the day when NVIDIA is going to go? Or is it going to be another day where it gets stuck in the range? And if it gets stuck in the range and you're trying to buy something based on something that's on a smaller time frame than the daily pattern, then there's a good chance that you're going to get shaken out if today's not the day that it goes. So the preferable situation, I really do think, for that opportunity right now would be to have stock versus yesterday's low, or even versus the low from the 9th. I think yesterday's low is sufficient. It's confirmed by these moving averages. If those lows break, then the idea is wrong. Make sure you get yourself stopped out. I think that's the better situation. But then you can look to also, maybe find something on the intraday. This was a nice intraday break here on good volume. You could use this as like an ignition bar low with this big volume here, and maybe have some soft long versus 897.72. That could be a little bit of an opportunity, but then again, you really need today to be the day for it to go. So, hope that helps. I'm just reading what Rich just posted. Yeah, so that was the Island ETF. Yeah, Island is before my time, but that's the OG ECN. Yeah, that emerged with New York in 2006. Thanks, Rich. Popping over to the YouTube from Robert. When would you start believing in today's long? I honestly believed in it the second I saw the TLT get above the 8:30 a.m. high. Yeah, the IWM did that as well at the same time, um, but the SPYs and the Qs lagged. And I said I don't care about the SPYs and the Qs because the IWM is going and the TLT is going, and I think that they'll end up following up, which is what happened. You can see, like we started at like, I don't know, 521 quarter or so in the SPYs. SPYs didn't really get back above that until 10 after 9, but the TLT got above its 8:30 starting point by 8:50, 20 minutes before the SPYs did, and the IWM got above its starting point also at 8:50. So for me, as soon as I saw, again, because my thought process is that on hot numbers right now, yeah, the market's going to go down, but I think that the risk is to the upside. So I think even an inline number, which is what I would kind of argue we got an inline number today if you include the revisions. I think that also will lead to a higher market right now. So at first I was like, oh crap, market's going down. We got hot PPI. And then Rock was like, "Oh, you got to see the revision. The revision, brings it down." And saw that data come in. Pat posted the exact numbers, and then pretty soon at that same time, we saw the TLT and the IWM at 850 recapture the 830 high. And then I was still a little bit nervous and a little bit cautious because SPYs and Qs weren't confirming it. But I was like, if the IWM, which is the most interest rate sensitive area, is doing it, and the TLT is doing it, which is what's enabling the IWM to do it, then I think I can kind of believe in this market for continuation. Though I still think that tomorrow is the main event. So that's the answer to your first part of your question. You were looking at SPY 521. Okay. Yeah, so you're looking at that as kind of the starting number, I guess. Oh, you're looking at that as a daily level. At the open, we held above 521, and then volatility kicked in during Powell's speech. But at 11:15 candle, I thought we will go lower and break back through. We thought off because of this upside tail. This tail that came through here. Yeah, I was thinking at this point we were going to just range for the SPYs, but the IWM and the TLT were still giving me confirmation. You thought that we were going to break 521 and go much lower, turning the market into an intraday downtrend. I never thought any of this for a second, honestly. Just because, again, of what I'm talking about with the TLT and the Russell. The SPYs always tend to hold up as long as either the SPY, as long as the IWM or the Qs are holding up, the SPYs tend to hold up. Yep. From Gabriel, look at TOST. Yeah, TOST building out a beautiful bull flag after that breakout. Yeah, great time correction. Cherry on top. This should be able to catch a bid with lower rates. Cherry on top is the fundamentals and financials are improving significantly this year. You're watching for long. Thank you for putting it on our radar, Gabriel. I would love for this ADMA to catch up to this base a little bit further. It'll be up there a little bit more tomorrow morning. But if the CPI is light, you're right. It probably won't wait for that ADMA. So worth it to have on the radar. Thanks. From Jim. Shorted AMC around 11:30. All right. Yep. You can see that break of intraday support really comes in around 11:35, 11:40. And I was instantly in the money, so I settled for a scalp. Obviously, it had a lot more downside to move, but I was subconsciously fearing a halt that would have the trade go against me. I had size on for the trade, so that factored into my decision to take profits quickly. Would you consider this more of an irrational fear since the support level was so important for the stock today? There is always a worry that you should have in the back of your mind when these stocks are moving so crazy and they're having constant limit up down halts that you can get into a position that it halts and then it gaps against you. That's always something that you should be calculating for and having in the back of your head. What it sounds to me like is what messed you up more than anything, though, is the size that you took on the trade. It sounds like you took more size than you were comfortable with, either given the risk or even if it's not the exact risk of where your stop loss is, as you're saying and as I'm saying, you do have to calculate, I think, at least an additional perceived risk of a halt move against you. It is something that should be in the back of your head. So it sounds to me like your degree of sizing messed you up more than anything. I don't know. Maybe it's just me with my trading style kind of adjusting over the years. I fairly rarely take pure scalp trades anymore. I don't want to say I never do. Every once in a while I will. Usually, if I am, it's because I'm seeing like a stepping shorty in a circuit broken stock break, and I'm taking advantage of that for a scalp. But generally, I find that scalps are a little bit reward limiting. You're taking a pretty good trade here, and that's also not to say that I don't hate the idea of scalping part of your size to get risk covered. As a matter of fact, I love that idea, and it's especially so if you feel like you've got a little bit too much size on. I would say instead of scalping the entire position, scalp a percentage of it, which sizes you down, covers your risk. It's kind of similar to what I did with GME. Like, I don't remember what my exact size is or what I kicked on it, but I'll show you here how I traded it. I built in a little bit here as this pivot was coming in and versus that pivot, and then very quickly took profit on a majority of the position, whatever it was. Call it 75% of the position, and then the remaining 25% of the position was and at that point, that remaining 25% of the position was so small compared to the initial part of the position that I said I don't care. Even if a halt happened, like I was in a position at that point where if I get stopped out, which is what happens, it's going to be a 4-figure win for me. And I based on that and the amount of size that I had left, and maybe I was even not ambitious enough. I'm just trying to do some quick math. I would have needed the stock to halt in front of my stop loss without triggering it and gap to like $38 in order for me to just be break even on it once I sold all this stock. And then everything else I was just holding as a moonshot. I said 50% of what I got left, $75, 50% of what I got left, $100. Let's go for it. And if it gets up there, it'll be a big boost to P&L, even though it's a very small position. It's such a huge move. But if I get stopped out, I'm still gonna make good money in it. So that's what I was trying to say. I was like, I'm in a position where I'm either gonna make money or I'm gonna make a lot of money, and those are the positions I'd like to be in. So I'm just using this as an example with your trade. You could have kind of been similar but different, where oh man, I took a little bit too much size. What if they halt this thing, gap it against me, yada yada. So I'll scalp a majority of the position. I'm sure that if you scalped 80% of the position instead of 100% of the position, that the remaining 20% of the position would have been inconsequential enough that you could have held it for the bigger move lower or trailed it or something like that and increased your overall P&L on the trade. Just trying to make sure I covered your question. Would you consider this more of an irrational fear since the support was so important for the stock today? Yeah, no, I don't consider it an irrational fear, but I consider it should be something you should be thinking about even as you're entering the trade. You want to really understand the risk on the trades that you're taking before you get into them. Cool. Anything else, gang? Ladies and gentlemen. All right. We'll wrap it up. Almost 5 o'clock. Hope everybody had a great day. And if you didn't, please learn from it. Learn from any mistakes that you may have made. And let's just continue to improve day in, day out. So have a great night. I'll see you all tomorrow.